I think we're gonna be good.
Late night over here.
All right, we are live, guys. Okay.
All right.
All right. Hey, everybody. This is Matt with Altcoin Buzz. We got a special live event coming up for you in a few minutes. We got to give everybody time to get in here. I've got Jason Jenkins at Jenkins Risk Management and Blockedge Capital, and Alec right there. There he
Hey,
is,
guys.
the man. And
Good evening. Good evening.
Jason screen share me. You don't. We better not screen share me twice. Nobody wants to see my mug. So, gotta see
I'm
Jason.
here. Hey, how are you?
Excellent. We're going to do all the formalities and all that later, but we got to give plenty of time for people to get in here and get going. So what are you watching there, Jason?
Oh,
You get the hockey game going in the background. What's up there?
Toronto Bruins game. My Avalanche lost a little bit earlier, but I'm a big hockey fan, so it's that time of year.
So all the Altcoin Buzz audience in Canada, eh? They're with you right now.
Yeah, a lot of our blockchain senior development team, this whole project we're working on, they're all out of Toronto. So they said it's about 0 degrees there.
Right.
And, every TV in the city, though, will have the game on. It's a little bit different than South Florida, where I have to beg people to get the game on. And, they're playing old Florida Gators games from last year.
Yeah, that's pathetic, right?
Yeah. So it's a little tough to get the games on down here. Yeah.
Exactly. All right. Well, we're excited to do this. We were trying to, what I'd love everybody to do, if you can, get on your Twitter, get on the comments, tell your friends we're going live. This is something that we've been wanting to do for weeks and weeks with you guys at Blockedge Capital, because we have so many in the audience that are ready to trade. They want to get some good fundamentals. So I've been happy to do this. We had a couple weeks there where folks had an opportunity to get on with you guys in your live trading room. So for everybody out there with Altcoin Buzz, Jason, kind of tell them what Blockedge does, and then Alex is going to give his take on it too.
Yeah.
But what do you guys do here?
Yeah, so my background was I've been a trader professionally for the last 10 years. I traded in the fixed income markets. I ran a couple rates desks. I started the business at Charles Schwab on the equities and options side. And then I had the chance in 2008 to trade fixed income. Didn't know anything about the bond market. But I traded on the institutional side. We traded big size. Probably 40 to 60 billion a year in revenue. I covered all the primary dealers, which is just, the primary dealers is the name they give to the big banks that sell the government's debt. They act in a dealer role. And then I covered hedge funds and large money managers. Left that position, left a couple broker dealers that, again, I ran a rates desk on, and started my own company called Jenkins Risk Management. And I met Ritas and Alec, and we partnered up. They were in the out of kind of Chicago and traders as well. And so anyway, we have a group of traders that we trade Forex and futures. And then we got into crypto markets about, I guess, a little bit over a year and a half ago. And we're currently building out a company called Blockedge Capital, which is our digital asset management firm. So we're taking advantage of this brand new asset class and this multi-trillion-dollar shift that's coming. And then we're also building out a trading platform called Rhythm. And we're basically in the private ICO process right now. But yeah, so we have a bunch of traders trading crypto. We've got a lot of Forex traders all around the world, and we trade together live. We do a lot of educational stuff. Yeah, that's kind of what we do every day.
Awesome. Alec, what's your background and what's going on with, remember, I want you to talk about distributed posts too, but
yeah, of course. Yeah. Jason pretty much hit the nail on the head there. We're all traders through and through. crypto about a year and a half ago. I kind of lean more on the tech side, tech background, and Jason more leans on the trading background. But we all came together, been trading ever since. It's been what, 3 or 4 years now?
Mm-hmm. Yeah.
And remember to mention distributed post. You guys got a great site going there.
Yeah, I'll plug it real quick. Yeah, the distributed post, we started that it's about 2.5 weeks ago. Pretty much we had a bunch of contributors, traders, developers. They all want to start getting their content out there somehow. So we gave them a way to do it. Jason, I think, is sharing it right now, but distributedpost.com.
Yeah, this is kind of the initial stage of we're building a media company with inside our trading platform. So I'm sure a lot of your audience, Matt, has used Thinkorswim or any of these different trading platforms. If you guys know, like before Thinkorswim merged with TD Ameritrade, they were a lot of options traders that they had a nice little platform. They were out of Chicago, but we envisioned the same kind of similar trading platform, but specifically geared towards crypto, getting the market right. We have, sending out buy and sell signals, and we do a lot of that right now in our chat room. But also we're building out some things on the technology side via the blockchain. We have this technology called Bring Your Own Wallet. So we can send out, hey, we like Cardano down here at 15 cents. The 4 hour goes on a rally, 4 hour chart. We issue a sell signal. We can send it right to your phone, for example, and you can say, hey, I'd like to participate, yes or no. We do the transaction and actually send it directly to your wallet. And that was something we wanted to do because right now, obviously, the marketplace is pretty disjointed between all the different exchanges, right? That you have to jump around and transferring coin back and forth in and out of your wallet. We wanted to simplify that process. But anyway, this distributed post is part of our media platform that's going to be inside of the Rhythm platform.
I like it. Hey, Jason, show them the trading room, and we're gonna get started here. But show them so they can see what you guys do there. And
sure.
And keep in mind too, guys, I've been telling you for weeks, take advantage of this. Jason and the crew, Alec, have given you free access to the public trading room. And I know almost 200 of the Altcoin Buzz audience has taken advantage of the public trading room. But tell them about the private trading room and your signals that you put out.
Yeah, sure. So anyone that just comes to actually Jenkins RM right here, there's a chat room button. It's free to join, and that basically pops you right into the what we call the trading talk or the trading floor here. And I'm posting, this is our podcast that we do, but we're posting stuff on the overall market. So if it's jobs day, we're talking about the number. I'm talking about what the dollar's doing. We're talking about what's gold's doing, GDP. And we do a lot of cycle work. So I post a lot of that stuff, and it's a collaborative environment. So we're all going back and forth talking markets. And then yeah, now we have a paid room. It's only $99 a month. But we put in a couple dozen trade alerts throughout the day. You can see these are some of our recent trades, but I mean, we've been at a lot of different coins, a lot of different entries. Yeah, so that's a little bit part of the room. So we'll send out an alert like Cardano here. This is a coin we've been really bullish on. It's been one of our biggest long ideas. So we send out buy alerts on how we're working into the position. I'll talk about, hey, we're taking profits, and this is why we like selling. The cycle's high. We're moving into resistance, that type of stuff.
Okay, so this is really important, Jason, because Altcoin Buzz audience out there, they're way into crypto, they're way into altcoins. You guys out there, hey, if you're watching this live stream, I see we got 140 people right now. If you guys could please hit the like button for us. YouTube is going to send this to more people. So we're getting ready to start here. We're getting ready to talk about actual trading, right, Jason? Right, Alec?
Yeah,
We are.
yeah, absolutely.
We're going to talk trading altcoins. We're going to go through positions. We're going to go through your favorite ones tonight that you're working on. And these guys, I know these guys already. I've been reading all the Jason stuff for the last 6 months. As far as money management, trading, and the things he does, I trust these guys to lead you guys in the right direction out there in the audience. So if you can do that for us, hit the like button. Keep hitting that like button so we can get more people on here. We're really going to get started and dive into the meat of trading and a lot of the altcoins and stuff. And actually, whatever you guys like, share it on Twitter, and we're going to blast it out there. But Jason, sorry, I didn't interrupt you there. But
Nope.
Tell folks the volume. I wanted to give the audience here an idea of you and I have talked about it privately, but the difference between the dollar amounts that you traded in bonds maybe, or the dollar amounts on the trading side that you guys were moving compared to where the crypto market's right now, and why you're so excited about crypto markets.
Yeah, absolutely. So my background, I mean, I came from trading treasuries, which happens to be the second most liquid market in the world. The first being the Forex market. So you're talking about, I think the last number I saw was 4 to 5 trillion moves around a day in the Forex markets. That's the currency markets, the euro, the dollar, the yen, etc. But then the next really deep market is the Treasury market. And so I know we had a small desk of about 8 traders. Some of the banks that I covered I talked to the heads of the desks at Deutsche, RBC, Goldman, and those guys are trading much bigger size. But just to give you an example, I mean, I might have an order for 200 million tens, and that might be me on the bid, and we might trade maybe 2-3 billion in volume a day just on our desk.
Just on your desk.
Yeah, just on our desk.
So on a typical average, when everybody was real disturbed about the last couple of weeks with the market going sideways on crypto, Bitcoin was trading about 3 to 4 billion a day, total, right. on very normal average light days. And so just your all's desk alone was trading how much?
Oh, I mean, we probably did 40 to 60 billion a year, just between I had myself, a couple junior traders, and 2 other head traders. Yeah, and that's the Treasury market. So I mean, what was interesting, and part of the reason why I left fixed income, was because once the Fed took rates to 0, and I traded through the financial panic in 2008. I mean, I was on the phone. We had customers at Lehman and Bear that obviously we lost those shops, and I always kind of say it was the front row seat to the end of the world trading that time. But we really saw the liquidity come down. I mean, we used to work orders for our customers. Guys would give us 50 million, 100 million, chunks of orders per level. And by the end of the crisis and coming into 2016, 2015, a lot of those orders were down to maybe 5-10 million. And these are big shops. I mean, Goldman, I got it to a point where Goldman wouldn't even work my orders in the Tokyo and London session because they didn't have anybody working on the London desk, which to me was just amazing. So not only did the liquidity come down after the financial crisis, but we had things like the Volcker rule, which was a rule that got passed down. Dodd-Frank was another big rule that the government passed and put on the banks. So a lot of that regulation brought the liquidity down and the risk taking down, but also the Fed taking rates to 0. The bond market, when you have rates that low, there's very little price movement. So there wasn't a lot of risk taking. And then I looked over in the crypto markets, and the velocity of money there was just absolutely phenomenal. I mean,
so this totally gets down to where we're going with this. Why does all this trading and background in markets matter to altcoin buzz and the people that are getting into crypto right now today?
Yeah, well, I think the biggest thing is that the big institutional money there's a huge herd that hasn't come into this market yet. So the big, really institutional money is just starting to get into the space, and everybody wants to get in, wants exposure to this asset class. But right now, they're trying to figure out all the compliance. So, there's a lot of pension funds, or there's a lot of family offices, or even, we're trying to work through the ETF space to create some of these ETFs on Bitcoin. And the compliance team is trying to figure out, hey, how, we want to get into the space, but we need the SEC or we need the CFTC to tell us what the rules are. But the exciting part is, I mean, Bitcoin has been probably the best performing asset last year and 2 and 3 years before that on the planet. And this is just with retail money. So we still haven't seen the big, massive institutional money.
This institutional money you're talking about, just give us a big picture idea. I mean, with treasuries. So people out there, they've never traded treasuries. They don't know what that's going on. But we're talking, you and I were talking the other day, the top, just Amazon and Apple alone, dollar amount trades more every day than Bitcoin.
Yeah.
So how about when you say these institutional people haven't even got in yet, and it's just been retail, you mean there's just a bunch of crypto hobbyists out there trading. But the big money coming in is what, 100 times this amount?
Oh, it's massive. It's massive. So, I mean, just the gold market alone. I mean, it's just interesting that you can look at the overall market cap of the entire crypto space. We're talking about trillions of dollars, and this is an entire brand new asset class, and we're not even. I mean, what is the market cap? 250 billion?
I don't know. I got a mental block about market cap. Everybody knows this in our audience about me and market. I think you have the same mental block, but that 300 billion right now is meaningless as far as people tracking market cap. And why do you say that? Why do I say that on market cap? In terms of people just following market cap as to looking at price.
Sure. Yeah. No. I agree with you, because anyone can create a coin and put price it at $1, and boom, you have a massive market cap.
Yeah, because of circulating supply. So who says that their 10 billion coins has transactional value? Who says that there's actual intrinsic value to some of these coins? And that's where you derive the market cap. So you take the price times your circulating supply, and you get a market cap. Way different than, let's say, Apple, the stock. Whereas you have an actual underlying asset to this. Apple has earnings,
right?
Dollar amount earnings, and that's how they'll derive a value of a stock based on that. But a lot of folks out there with altcoin buzz haven't done any trading in their background. They haven't traded stocks. They haven't traded any of this stuff. So why is it so cool? And I don't know, maybe Alec can comment on this too, but we're going to get into trading, guys. We're going to talk about signals. We're going to talk about your altcoins. We're going to answer your questions. But just to start this off, why is it so cool in this new emerging market? Why you think that institutional guys and big market traders and big hedge funds getting into the crypto market, why is that so good for our audience?
Yeah, I think well, we just look at the all the different markets, I guess, that the cryptocurrencies can disrupt. So it can act as a currency, so we can compare, hey, if there's 60 trillion in M2 money supply, we haven't even scratched the surface of 1/10 of what crypto could potentially disrupt as far as the currency markets. You look at something like gold. If you want to compare Bitcoin to gold's probably trading near this 1375 level. That's about 8 trillion in market cap. So we're not even one. Even if we got 1/10 of the gold market, you're still looking at prices at 3 or 4 times where they are from here on Bitcoin.
Well, the traders want returns.
Right.
These guys, these institutional traders, these money guys, everybody out there, you got to hear this. They want the returns that Bitcoin is giving.
Yep.
Because the overall markets are very compressed and the volatility has been low for quite some time. And these institutional guys are craving a return on their money.
Mm-hmm. Oh, absolutely. And
you got in to trading crypto.
yeah, I mean, we can just even look at the bond market here. We can look at something like the 2-year. I'll show your audience here.
Okay,
Back
good.
in,
And I got you on
guys,
screen share.
You can see my futures chart here.
Yeah, we got you.
Okay, cool. So back in, just so everybody goes, back before the financial crisis here in 2008, you could, maybe I can see it here, but we would have days where the 2-year, this is 2-year futures. So it's the 2-year Treasury bond, the United States government Treasury bonds, a 2-year duration. But there would be days where this 2-year would move 5, 10, 15 ticks. So kind of like in stocks, you have points, but in the bond market, it's ticks. It trades in 30 seconds. But just to keep it simple, we would see these guys rally 5, 10, 15 ticks would be a good move. Well, today's market with rates being so low, we maybe get the 2-year to move. You can see here 106.05 to 106.7. So the entire day of trading or a full day's range is maybe 2 ticks, 3 ticks.
Mm-hmm.
So the amount, as a trader like myself that wants to make money every day, day trading or swing trading, holding positions over several hours, you need the market to move. So a lot of the professional, what they call prop trading community, they want to trade the stuff that has higher volatility. So they look at Bitcoin and say, wow, I mean, these markets are rallying 30, 40, 50%.
There you go.
In a couple days. I mean, we just had some positions here on Cardano. This has been the name that we've liked. This is our best long idea currently.
This is great, Jason, because a ton of our audience is in Cardano. If you guys are out there and you're watching this live stream and you're in Cardano, hit the like button and type in the chat so we can get more people on this. But you might as well go into your long-term, your mid, and your short-term strategies on Cardano, because we're here and they love it. Everybody's very into this.
And we were talking about this last week with our team, that what's interesting about Cardano is anytime you get a major coin or one of these names that is a serious project, right? Like everybody's probably familiar with the team behind Cardano.
They are. Our audience definitely is. Yeah.
And so it's, to me, the fact that this coin traded basically as high as $1.40 into the end of the year and the early part of the year, and you've traded all the way back to levels where you're so close to zero. What's nice about this trade is there's so much what they call asymmetric risk reward, meaning, I know where the floor is here on Cardano at 0, right? So there's a very low probability that this coin is going to go to 0 and stay at 0. Even if the project struggles, falls on its face, you're going to have plenty of trading opportunity bouncing around 0. But what's nice about this trade is that I know where my risk is when I know that the floor is at 0. So I can plan my trade. All right, whether I'm willing to lose $1,000 or $5,000 or $10,000, I know, okay, if I start buying at 20 cents, 15 cents, I can structure my position size that, okay, I want to be long, 10,000 tokens. And if I'm willing to lose, $1,000 or $2,000, I can structure my size, but I know where the floor is. And then the upside from here is just absolutely tremendous. I mean, just if we rallied 50% of the way back from the highs of the all-time highs, I mean, you're talking just tremendous reward. And this is different than something like Ethereum, where if Ethereum, when Ethereum took out 400, you don't really know where the floor is. I mean, it could go to 300, could fall to 200. That's a big percentage drawdown from those levels. Well, the nice thing about Cardano or something like Salt is you're you're backing up so close to zero that you can really plan a nice trade where you know where the floor is.
Okay, so typically, you know, one of the things that I love about what you do, Jason, is, and what you guys teach on the videos and your training videos, is you teach money management first.
Yeah.
I think because of position size, and I do that on all my videos too. And it comes down to, okay, what would you dedicate for the typical person out there that's going to trade Cardano? And you're saying you'd only put in what you're willing to risk, right? But let's say you put let's say you have a $10,000 portfolio, okay? And what would you say that they put in towards Cardano? Maybe 2,000.
Yeah, I think it depends. So when we talk about when we talk about risk management, I think the first thing is you got to look at your overall portfolio. So you look at that as a pie.
Yep.
And I mean, obviously, if you put all your eggs in one basket, then you're really, you know, you really need to have that one particular play pan out.
And so, say you're with Cardano, you've got a $10,000 crypto portfolio. You're willing to burn all that on crypto. It's okay. You're cool with that. It's money you can lose. And then you're saying then, and if you, whatever you dedicate towards Cardano here, on a risk to reward basis, if you put 2,000 towards it, right now it's very unlikely it's going to go to zero, but you've got an upside for that $2,000 of 2 times your money, 3 times your money.
Oh yeah, right, easily. So yeah, so if you said, let's say for example, you have 2,000 that you want to put into Cardano, and it's trading at 20 cents basically right now, I believe, right?
Yeah.
So that's 10,000 tokens. Well, we kind of teach our traders, you know, it's tough to plunge in at one price. So maybe give yourself, you know, 2 to 3, 4 entries. It's a little bit easier to work into a position that way.
Scaling in.
Yep, that's called scaling in, and what they call working a position. So for it's easier. If I buy a little bit here on the way down at 25 cents, I'm patient. And then it gets a little bit lower, I buy some more at 20 cents. And then it gets a little bit lower, I buy some more at 15 cents. You know, that's an easier way to be both patient and consider time into your process, and instead of trying to plunge in all at one particular price point at one particular point in time, much easier to give yourself a longer time horizon, especially when we've experienced an intermediate term downtrend that we've this 2 months of weakness we had. You want to be patient when you start to build into these longer term positions. But yeah, so if you know, okay, I'm willing to put 2,000 in, that's basically 10,000 tokens at this current price. You know, then I know that I'm working with, you know, 2,000 to 3,000 tokens at a time that I want to, you know, average into my position. And then what we like to do is do something else called adding and reducing. So most big traders, since we're kind of on a size topic, which position sizing is probably the most important thing in trading. You can have, there's lots of different signals, there's lots of different, you know, trading strategies, but at the end of the day, it comes down to how you work your position and your timing that will really determine whether you're.
Wait, so this is what a lot of folks out there in our audience have never heard from anybody. So you're saying, in essence, it almost doesn't matter what price you get in; it's how you manage it once you're in.
Yeah. So let me see if this works. I'll just give you an example if you guys can see if I.
And that's not a normal concept, guys. You know, I tell you all the time, every moment in the market is unique. That this time in the market, which when he goes over his technical analysis of Cardano here on the charts, you need to understand, no matter where you're in, it only matters what the price is right now today. And where does that put you for risk in your portfolio, in your crypto portfolio? So go ahead, Jason.
Yeah, so I teach my traders a lot of times, you know, I think in terms of 1/10 of whatever I want to put into a position. Okay. A one lot or 1/10 of my max position size is a pretty light position. So sometimes I'll tell my guys, hey, enter with a light position here, maybe light, medium, or heavy. And so if, let's just say, for example, if this is 10,000 tokens that I want to put into this trade,
Yep.
I might only start with 1,000 right here. All right.
There you go.
And then let's say the market drops a little bit further and we're low within the cycle. Then I buy another 1,000. The market rallies. This was a little bit of a bounce, but basically just a bounce to another lower high. And then sure enough, we get lower lows again. I buy another 1,000 here. Maybe I pick off the low. I buy another 1,000. So right at this point, I've had an entry here, 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 and here.
Yes.
And each one of these is 1,000. So that would put my average about right there.
That's right.
And now I'm in for 4K, right? 4,000.
You're trying to put 10,000 tokens. You're trying to get up to that level for your position.
Yep. This is just for example, right?
Yep.
So the nice part about this is there's a lot of beginning traders or amateur or novice traders that they just want to plunge in at one price. And it's so difficult in trading to think that you have that good a timing that you're going to enter at the perfect spot, right? At the perfect point.
The pro traders, Jason, who are out there who have traded 20, 30 years, they never just put it all in at one spot.
No. Nope, never. And I'll just give a little insight to how the big institutional traders trade. For example, my customers at like Deutsche Bank, I might call up the 5-year trader, and these guys have, billion-dollar positions. And when you have that big of a position, you can't just all of a sudden get flat by the end of the night. Like it takes a long, these are aircraft carriers that takes a long time for them to change their positions, and there's not enough liquidity for them to even get out of their position by the end of the night like that in a lot of instances. So what they do is it's called core trading. So if you have a large position, you're going to be trading around that position, and I'll show you here in a second. But if I'm building a core position longer term again with the goal of 10,000, this is what adding and reducing around a core position looks like. So as I'm entering, I'm being patient. I'm buying low within the cycle. Obviously, I want to buy low. I don't want to buy high. So I'm scaling in. And let's just say at this particular point in our example, if I buy well here at 1,000, and now I have this average price that I've worked down into the market. Well, guess what? As the market comes back up here, this will change the color, make it a little bit easier. As the market rallies, well, guess what? I can come out of a little bit of this position because I'm in the money. This is a pretty good move off the lows. The cycle's high. So maybe then I sell 2,000, right? I'm long 4. The market's had a pretty good bounce. I take 2,000 off. So I realize some profits.
For our group, this is kind of like it's paying you rent. See, guys, when you have an investment and you get a huge run on it, it's like your tenant paid you rent. You take a little cash off the table, take a little rent from this thing, and look to get back because you're trying to get to your 10,000 tokens.
Mm-hmm.
But you just took a little rent. You took a little income out of this, right?
Yeah, that's a great analogy.
Go ahead, keep going.
Yeah, or I like to think it as there's 2 types of trading. You have my wealth positions, which is my longer term holds, or the core trade that I want to hold for, maybe my target is $1 on Cardano, right? Longer term.
Right. But a year or 2, or what do you
yeah,
say?
I mean, in crypto, it could be it could be 6 months from now. It could be, it could be 2 months
by the end of May.
Right. But the point is that the wealth trading is the longer term holds, and then the income trading, like you're saying, Matt, you're clipping this cash flow off of your position. So I'm long a couple thousand here. I get a nice rally. Boom, I book some profit. Then when the market ebb and flows back the other way, now I'm taking advantage of putting the same capital back to work. Now maybe I'm back in on 2,000 tokens, right? So I went from long 4,000. I sold 2 out up here. My position is now just long 2,000. The market comes back down. I put 2,000 back on. Now I'm back long 4. And then maybe at this point in time, we identify a cycle or a trend breakout. And maybe I want to get aggressive here, and I add another 4,000 between these two buys. So now I'm getting closer to my 10,000 target, right? At this point, I'm long 8,000 tokens. And then sure enough, you get another rally. Maybe you want to come out of a token, right? So maybe you sell 1,000, maybe you sell another 1,000, another 1,000. And the whole time I'm still keeping my core position. I'm just adding and reducing around the position. And why that, what's great about this strategy and this type of trading is I'm compounding my returns. If I just buy in everything right here, 10,000.
Yep.
And I'll erase this here for a second. If I buy in here on my full 10,000, well, guess what? In all of this market action, there's nothing for me to do because the market hasn't even got above my average price at this point.
Exactly.
In time, right?
Exactly. You're frustrated.
Yeah,
you haven't made any money. And then
you're right.
What happens to people, Jason, when it gets back up there? This is what I have seen all these years. It finally gets back up to where you bought your whole, you shot your entire account into that 10,000 trade right there. And it gets back to there. And do people automatically have an easy decision right there at that point when they break even?
Well, right.
It's painful.
It is. And this is the psychology of trading and the emotional side. If I'm in right here at, call it 25 cents, right?
Yep.
Well, by the time the market trades to here, there's a lot of people that are, this is a pretty good percentage drop, right? I mean, this is 24 cents to almost 12 cents. You basically had a 50% drawdown.
Yeah, because don't look at it like 2 quarters, guys. This is 50% of your money.
Yep.
50% of your position. That's a big move.
And so what happens is, if being too heavy too early, by the time you have this move to these lows, they're seeing too much pain. This is too much for that trader to handle. And guess what? They end up selling the area where, in the other scenario, this is where you'd want to be buying more. And so this is an example of scaling in allows you to take advantage of the lower prices and be more patient. Whereas being what I call too heavy too early, that's the situation where the trader ends up selling the lows just because they're just too early on too much size, and right at the levels where they should be getting more aggressive, they end up puking.
And once you get back to your even, it's not over because you're still wanting to return on your money.
Right. And then so the trader that sits through this drawdown, they've set through a 50% drawdown. Oh, it bounced. Oh, couldn't get back to where I'm long. Now I'm getting nervous again. I'm getting antsy. And by the time the market does get back to the level, a lot of traders then just say, you know what, I'm going to take my break even. And whew, this was a lot. This was a lot for me to handle. I'm out.
Yeah.
And then only to see the market really take off.
Which causes you to make bad decisions for all your other trades that you get into. Because where your arrow is right there, the market had made a 40% move off the bottom, right?
Yeah. So
and you're asking it. Okay, so right there, right from that point,
50% off. This was our lowest ad, I guess, was right here. Our lowest entry here most recently was down. There was 14 cents.
There you go. Now
that's a 50% move, yeah, right there.
You just got back to break even because you didn't scale in, and so you just got back to break even, and you've been frustrated the entire move, and yet you're ignoring the fact that the market just moved 50% in your favor.
Yep.
And to expect it at that point to move another 50% so you can get a little profit is a bad mindset for traders.
Yeah, it changes the whole trade. I mean, that's what's tough about just plunging in at one price. I mean, I'll show you an example here on like salt, for example. This was another one that we felt.
I'm gonna Can you go over your whole big picture on salt like you have in the private trading room, people? And I'm going to go on mute because I keep interrupting you. But I want you to give, and then I want Alec to get in here and talk about some money management thing. But I'm going to go on mute, so don't think I left you. But I'm trying not to talk over you.
That's a problem.
Go ahead. Of why, and guys, as Jason is doing this, hit the like button for us because we got a lot of people in the room that are loving this.
Yep.
You're learning about position size and management. Hit the like button for us so we get more people on the stream. And he's going to go over this and use this as an education piece to learn about all your coins. I know he's just going to go over salt, but you can use everything he's saying for your favorite crypto that you're in. And I'm going to go on and cut it loose with you, and you guys can talk back and forth here on this.
Yeah, and so I'll go over what we call our top-down approach on how we view a coin in a second. But just to reiterate, these are my entries via our latest signals, and you can see this is exactly what I was just demonstrating on Cardano. This is our add and reduce method where you can see I'm entering and building this position over 1, 2, 3, 4, 5, 6, 7, 8 entries. I'm working into this position, and this is how true professionals will build into a position also. And as you start to learn and get better at this type of stuff, you actually end up getting heavier at certain points in time. Like we were getting these lots are much heavier than my initial entries up here. So again, back to that example, maybe it's 1,000, 1,000, 1,000. The market pops, I take 1,000 off. Then there's another 1,000, and then as we drop to levels and maybe at certain bigger picture points in time on a bigger cycle, a lower cycle on a higher time frame, maybe that gives me reason to want to start to get bigger in my size. So if these entries are 1,000, 1,000, 1,000, now I'm starting to put on 3,000, and now maybe these ads are 5,000 tokens, and then maybe even here I get even more aggressive and hit it with like 10,000. But at the same time, if I'm putting on 3 here and the market has a nice percentage bounce, guess what? I'm taking some off. And so you can see that as I'm working my average down close to the market and lowering my average, at the same time I'm taking advantage of these little percentage gains along the way. And that way you can compound your returns a little bit more. So anyway, that was just this is just a good visual of what we were doing and talking about in Cardano. But when we take a look at any particular coin or asset, it could be gold, it could be S&P 500. We have a top-down approach. So I like to think of when I'm analyzing the global economy, we do it the same way. We think about the big picture. We think about Asia. We think about Europe. We think about the U.S. And then we take that big bird's eye view, and then we narrow it down to if I'm bullish on Europe, well, okay, what parts of Europe do I like? Maybe it's Germany, and maybe I'm more bearish on places like Italy or Spain. And then inside those markets, you can narrow it down. But we do the same thing on the chart. So I like to start with the big bird's eye view on the monthly level, and then we work down each time frame to give a better feel, what they call a multi-duration or multi-durational process of, you have different trends. So we like to break up our trading long-term, intermediate term, and near term. And so the long-term time frame is the investing time frame, your monthly chart, your weekly chart, your daily chart. The intermediate term is where you get more of your swing trades. And the swing trade is just a term for 2 to 5 to 8 day moves. That's the swing time frame. And that's your daily chart, your 4-hour chart, your hourly chart. And then when we're day trading, we're looking at a 30-minute chart on in. So a 30-minute chart, a 15-minute chart, a 5-minute chart. Because you're always going to have, markets are fractal in nature, just meaning that they're self-similar, but smaller things build into the larger time frames. And so we can have a lot more micro moves, and I might have a long-term bull market, but an intermediate term bear market. anyhow, so we like to start with the monthly chart. However, a lot of these coins, they don't have a lot of data because these are brand new assets. So this monthly chart isn't very helpful. What I would say on this monthly level, when I do a top-down approach on this one, is that I care about these monthly lows here. Obviously, this is, again, they're at a floor at 0. But the fact that we kind of still haven't had a monthly close much below the prior $2 level is pretty significant. So even this month, last month, we still haven't closed below $2, and that's important. So we always care about the closing levels when we do a lot of analysis. So you look at the monthly closes, and the close just means, hey, where did that month finish, or where did this candle finish out, right? So $2 is a big level, and so far the market held it. That's kind of another reason why we were getting pretty aggressive at the $2 level. And then I don't have any cycle work. So in our model, we care about price, which is the trend. And then we also care about time, which is the cycle. So you don't want to just only focus on price. Time is actually more important, and that gets into cyclical analysis. But I don't really, a lot of these monthly charts don't have a cycle. So then we go to the next lower time frame. We'll go to the weekly chart. Here we're starting to develop some cycle work. We like to use a slow stochastic. That's an oscillator. Oscillators are an equation of motion. If anybody's kind of ever studied physics, we built our model around a lot of thermodynamics, a lot of physics work, because everything is energy, and whether your heartbeat moves in a cycle, the way energy travels is in waves. The way the light travels from the sun is all wavelengths. And so that same energy moves through markets. Markets is just the medium, like energy is moving through water and wave formation. So anyway, these cycles create a pretty good rhythm a lot of times. And so we can see here that salt cycle is just starting to turn up, which is another reason why we're very bullish down here. And then from a price perspective, what we want to start to analyze is, hey, am I in an uptrend? Am I sideways, or am I in a bearish trend? And so there's different concepts that we teach our traders, but we're basically right here back in October, November, the market was pretty much just going sideways, right? And once we started to take out these weekly highs right here, that started to move the market into a posture of uptrend. So an uptrend is just higher highs, right, and higher lows. Higher highs, try to write fast, and higher lows. And so these were the prior highs. Boom, we're moving into new highs, and now you start getting higher lows, right, and higher highs. So this was a good run, and you can see that each candle, each low of the week was above the prior week's candle. And so a lot of times you can just follow the low of the prior week, and that wasn't violated until basically right here. And that shows you the start of a new cycle down and a new intermediate term downtrend. And that's what's been in place for most of February and March here. And that's the same formation that's going on Bitcoin and a lot of the other majors.
Almost every altcoin is in this pattern right now.
Yep, absolutely. And so just like I call this a swing line, it's a simple concept I teach my traders. You could, once you start to kind of see that, right, you can follow each prior candle's low, and right there, boom, you take it out. Now watch on the other side of that, you follow the highs of each prior candle, right? And right there, we took it out, but just barely, and then the market had no follow through. So we haven't taken out the prior week's high until, guess what, this week. Right here.
Ooh, this is good right here. Everybody wants this. Hey, if you guys are out there, you're watching this on Altcoin Buzz right now, hit the like button, please. This is critical to your all's crypto portfolio, Bitcoin portfolio, because we're getting into things where rubber meets the road of this stuff and breakouts of where this market's going. You guys don't think just because he's got the salt chart on the screen, don't think that this concept and this money management principles and the things he's talking about doesn't apply to your altcoin, because it does directly. Absolutely. Go ahead, Jason.
Yep. No, thanks, Matt. So now there's simple things you can do to help you identify the trend, which we teach our traders. But one of the simple concepts is if you put an 8-period moving average on your chart, that's what this red line is. The 8 is a great moving average. It really grabs the what I call the immediate trend. And so the 8-period moving average on a, for example, we're on a weekly chart. The direction of that 8, you can see we're descending now. That's showing you the intermediate term downtrend, right? So I can have maybe a long-term uptrend, but then I can have an intermediate term downtrend. And I can show everybody what that looks like on Bitcoin if we want after this. But just a simple concept, you can see that now we've taken out our swing line that I just drew. This is the first week we took out that swing line, and now we're testing the 8. So if we can get a weekly close above the 8, guess what? That hasn't been in place since January. So that would be completely new. That's something that we've been talking about as, you know, as more confirmation of, hey, this rally's here to stay, is we got to get a lot of these charts back above the 8 on the weekly.
Now, are you looking at volume too with that?
We do.
Breakout with extra volume?
Yeah, that's important. And it's more important in the crypto markets because just give you a quick example. It was always tough. I didn't care about volume when I was trading in the Treasury markets because
Yep.
it's so hard to see who the market is so big that I could be trading on one platform, I could be trading on another platform, I could be trading on one exchange. They created these things called dark pools where, I mean, there's so many different liquidity providers that it's so hard to see what the real volume is in a big market like that. But in crypto, I mean, if you're paying attention to a pretty popular exchange like the GDAX, which has a lot of bigger, I would say bigger accounts and even institutional money that trades through the GDAX, and you start to see big volume on up days or down days that's being tracked on that exchange, that really matters. I think as the institutions start to get in this space more, it'll be harder to really measure that volume. But for crypto, it's definitely something we care about. I don't have, it's not the end all be all. I don't have it up on this chart. But yeah, so then we go to the next time frame down, we go to the daily, and then here's where you can really see some nice examples, guys, of what, once you have this understanding of time, your consistency really goes through the roof because I'm telling you, it's just the design of the universe, but everything cycles. And if you're trading without the concept of time, then it's so much harder to scale in at the right time. It's much easier to chase the highs and ignore the fact that the cycle is right at the top of the cycle. And so what we try to do is time up our entries with the trend, and then obviously with the cycles. And we can just see here. Let me mark on the chart a little bit. So here, if you remember on the weekly level, we were talking about how we started to break out. This was your first weekly advance right in here, and this was the first bull market, and this is your first uptrend. And you'll tend to get higher lows. These are some exponential bands that we put on the chart. But when you're in a bull market, if I were to put into a 30-day moving average, it's kind of right in the middle of our bands. The reason we use these bands is just a good visualization. When they're rising, that shows you the positive wave formation. When it rolls over, I mean, you can see how these bands are all negative.
My favorite example is on that, Jason, is the rubber band thing. That it's, you stretch it, and maybe the top band is the top of your rubber band stretch. But a lot of times it'll come back to almost stasis, or right, where the rubber band's not stretched either way.
Right. Yeah, reversion to the mean. And that's the physics of markets. Just, how price gets to a level matters, right? If something goes vertical, they call that a phase transition in physics. When you go from a solid state to a water to a gas, if you look at what the price looks like when water is boiling, it goes like that. It just all of a sudden, boom, it goes vertical. That's called a phase transition. So when you have price that goes vertical and you create angle and distance, away from, you guys see that red, here's the 8 again, that red period moving average right there. And then if you want to put a 30 period moving average on a chart, or if you had a 50-day, that would be probably somewhere around bands right here. But notice that angle and distance, right, between where price is and here's the 8 way down here. And then look how far price is from the bands here. So that's creating, how something gets to a level matters. If it just slowly grinds up, that's not necessarily a reason why I would want to take profits. But when I start to get that, right, that's where you have to be taking profits. When Bitcoin was doing that, 18, 19, right in front of 20,000, this angle and distance that we created was just absurd. So you never want to be chasing markets that look like that. We want to be buying dips back towards the bottom of the bands or near the 8.
And of course, that's where your position size comes in, guys. If you were taking a little income off the top, or a little rental, little income off that, and then you said to yourself, well, I'm gonna maintain a core position, but I'm gonna wait and get back into my full core position when things calm down a little bit, you would have protected yourself from that and bought in at a lower level.
Yeah,
okay,
absolutely.
So you're on the daily.
Yeah, so I'll go back to Saul. I just want to reiterate that point. So this was BTC. See that angle and distance? Look how far. This is why we were telling our guys to take profits up here, because this is just incredible amount of angle and distance away from. Look how far below the. I mean, the 8 was all the way down here below 12,000. This is where you want to be buying longer term, not up, right? Not up here. Here's the cycles high. Here's the cycles low. We can come back to Bitcoin, but I'll just finish up with salt. So then we were on the daily chart. Oops, that's weekly. So my daily, how we define the uptrend, I don't have time to get in all the ways that we define a trend, but just some simple concepts. I'm looking for higher lows at or near our bands. And you can see at this point here on salt, when we couldn't hold 10, that was the end of this uptrend on the daily level. And so so when that type of stuff happens, what does that mean? It means you raise cash, you're trailing out. I mean, we were long in here, right? And so we were taking profits, we were adding back, taking profits, adding back, taking profits. And if I'm buying the dip here and then we break that low, guess what? I might stop out, take some, I take a loss on this trade, but all my wins here more than pay for the time I do stop out.
Jason,
right here.
For everybody to help him, you're almost guaranteed with this method to not be picking the top.
Yeah.
You guys need to understand. It's okay. So you're taking profits. You and I were taking, because we've been trading Bitcoin for years. You and I, because I was following your deal last year, I was taking profits on Bitcoin at 7,000 and 8,000 before it ran to 17,000. Because I think you were too. Because it had moved. It had moved, blown through 5,000, went to 6, went to 7, went to 8, and I was taking profits. Well, guess what, folks? I missed out on some of my portfolio running to 16 and 17,000 on Bitcoin. You're almost guaranteed with this method to miss out on some tops and to leave a little bit on the table.
Yep. And that's the prudent thing to do. I mean, anytime a market starts doubling and tripling, you need to take your gains. I mean, otherwise you're just getting greedy. There's a lot of people that didn't want to take profit at 17, 18, or 19,000. And guess what? If you're still in that hodl mentality and you didn't take any profits into 17, 18, 19, you don't have any cash to take advantage of the levels we have now down at 6 and 7. So that's part of managing your position, or what we call risk management, is taking some profits off, raising your cash. And so just like when Bitcoin started to break the daily, these were points where it made sense to raise cash, go to the sidelines, and then let some of these intermediate term bear markets play out, and then you get the chance to buy lower levels. But yeah, so on the daily level, as we're analyzing the trend here, I had an uptrend in place, couldn't hold the band, couldn't hold this higher low. and you broke the bands right here, and that changed what we call our TMS, which is just basically how we identify the trend. And then notice that the market's been making nothing but lower highs and lower lows, right, ever since. And so on the longer time frame, we still need to get salt above the bands here and above this high before I can call a brand new bull market on the longer term here.
Before we can call it a breakout of this
Yep.
recent short-term trend.
Yep. And so that's good. When that happens, that's when you're going to see your momentum come back. But while you're in this intermediate term trend, that's another reason, because I have a bearish intermediate term trend. If I decide to buy something patient on a scale and I do get a nice rally, that's why you want to be taking profits. Like if you buy here and you buy here and you get a pop and you don't take any money off, well, now you don't have the cash to buy the lower levels again as you try to work the turn. So anyway, there's a different, this is contrarian trading, which means you're going against the trend, because I got a bearish, right? I have a bearish trend within the long-term uptrend.
Right.
And so how I trade a contrarian play is I'm much more patient. I'm much smaller. So I might be buying, let's say, example, 1,000, 1,000, 1,000, all these buys might be 1 or 2,000. Over here, I might be adding 5,000, 5,000, because I have momentum. I have an uptrend. So I'm more aggressive with the trend. But then when I'm starting to nibble and build a position, I'm patient because we don't have the intermediate term uptrend. And then boom, when I do get this new highs, now I get more aggressive. This is what we call the right-hand side of the chart, or the right-hand side of the cycle. So this was an upcycle, and you don't want to be aggressive here on the cycle. You want to be aggressive here. So this was the start of the cycle here. I don't know if you guys can see it. I know I'm starting to really mark this.
What you're saying is, once it starts going in that direction, you follow the direction. Once it breaks out, it's the upside.
Right. So the majority of the time, you want to trade with the cycle and with the trend. So that means here I have a sideways down cycle, right? But then as the cycle starts to turn up, this is where you want to be more aggressive, right here. And
do you see that, guys? Back in December, this happened to a lot of cryptos and Bitcoin, a lot of things back in November and December, and it had done a breakout. Well, once it did that breakout and had momentum, that was actually a better time to get in than and then all the rest of the preceding 6 months. So like 2017, if you were in July, August, September, you might have been a little bored.
Yeah. Well, and I know we were accumulating and we were buying into this dip here, and I remember how the Twitter's feeds and the Twitter streams were all lighting up on salt up here, and this is, people were piling in at these levels at I remember 16, 17.
Woo-wee.
Well, at this time you already have a 1, 2, 3, 4, 5, 6, 7, 8-day rally, 9-day rally. These are the guys that are buying here. We were taking profits into new highs. The professionals are taking profits into new highs. The amateurs are chasing the new highs. So the amateur is saying, well, I'm waiting for confirmation. Oh, I don't like that it's going against me. Oh, as it comes back up. Oh, we're not above the high yet. Okay, now we're above the high. Man, I didn't buy here. Now I'm buying. Okay. So we have a rule I teach my traders, is that when we're buying the dip and I move to a new high, like above this high, we always take profit on new highs.
Yeah, now you got a lot of people out there, Jason, like, oh, great, that's great. You're drawing it here on this live stream, but what about the next couple weeks when I need help on these altcoins? And this is a good time. And you guys can comment on this. We gotta get Alec in here. He's being quiet today, but check this out, guys. And this is not a thing, but look what Alec did for you guys. He made you a special page for Altcoin Buzz. Okay, what Jenkins, Risk Management, Blockedge Capital have done, because you guys are wanting help. You want help on your altcoin signals. You want, and Jason's pumping out pure gold here, people. I don't know if you realize this, but I've been trading 20-something years. I did my first big option trades in 1997. So I've been trading a long time in this. You guys just don't realize what kind of gold he is pumping out here for free right now to you guys on this live stream. I mean, the stuff he's giving you right here are years and decades of experience of money management and in markets, in doing things that are going to keep you healthy in your portfolio for the long term. But look what Alec did here. He made you jenkinsrm.com/buzz. If you guys go that, you put that in, they gave Altcoin Buzz subscribers 10% off on everything. Remember, here's the free room. See this right here? This link.
Yeah.
This is totally free. We are not selling you anything. We're not shilling anything. I don't even care. You guys just load the comments up with how I'm a shiller. You're wrong. Because what? Yeah, I really could care less if you're going to hate on that, because between us, we've been trading a long time, the three of us that are in this room for you guys. And we want the best. I want crypto to move forward, Jason and Alec. I mean, if the more people that we get into crypto, the better off we all are at this point. And I want this market and this thing to move forward. And I know it's better to give people good trading advice and money management advice and get you guys going on this than for the long term. You know, I want our audience to be healthy for the long term in their investments. That's the only benefit I get out of this. So, you know, trust me, we're not just trying to sell you something here. They gave you a free public room right here. Get on that. Like a couple hundred of you have already taken advantage of this free public trading room. And then if you decide to go into the private trading room with the guys, with Blockedge Capital, look at this. You can get the on-demand trading course, 300 hours of past live trading sessions, 9 hours of training. Like Jason, he's already given you all this for free. He's like me. He gets on a video, and you just want to – I just love this stuff. I just love to talk about it, and I love helping people on this. And I know you can't help yourself. You're not holding back anything, right?
Yeah, just we're natural teachers. I mean, I've trained a lot of traders over my years, and it's just something we're passionate about. So
exactly. So we're not holding anything back, but I know you guys want signals, and this is what he does. You can see my screen here. Okay, here's the Jenkins Risk Management chat room, and here's the private room, guys. Look at this. I'm in on the private room, and you've got under topics.
Yeah, scroll down there. This just shows you how many signals we put in.
Look at this, guys. These are trading signals. This is Jason and the Blockedge guys and Alec pumping out real buy here, sell here, take a little bit off the table, lighten your position, add your 1/10, add your 2/10, add your 3/10. This is real stuff here, guys. This is what you want. This is what you're asking all the time. And so, Alec, you go here, man. Yeah, talk about it.
I didn't want to interrupt Jason. He was on a roll that entire time.
Man, I love it.
And when you start teaching, I look and there's an hour already gone.
I know. I love it.
I didn't want to interrupt. You share everything and teach much better than me. You hit
You didn't want to add anything there, Alec?
You know, I think it's important.
Post?
Yeah, I think it's important to. Well, I don't think you hit on any fundamentals. So these people, you're showing these charts and trades, and I think people need to realize that there's a lot of thought that goes into what positions and what projects you trade around.
Yeah.
So you have to determine what projects you want to trade, and then from there, everything you just shared the last hour kicks into effect.
Yeah, I mean, there's so much to trading, but I mean, we've always had a view that there's the fundamental view, there's the technical analysis view, there's the what we call cyclical analysis, and then there's also actually something called mental analysis. So we've always had the philosophy that, you know what, fundamentals really matter very little as far as your timing goes. The fundamentals is great, gives you an idea of where something might trade to and whether the project's got, you know, what kind of potential it has longer term or where something might trade to on the downside. But from a timing perspective, fundamentals never help you with, I can make a case for why Bitcoin should be 500,000. I can make that same case on the highs at 19,000. I can make that same case to, you know, today at 7,000 or 8,000. So there's fundamentals, which is what we talk a lot about here on the distributed posts, and we've been trying to aggregate just different legal opinions, legal fundamentals, technology. We're trying to just put everything together and just make it a great spot for people to just, you know, stay up on what's going on. And then the trading side, everybody has an opinion now from a technical perspective for the most part. I mean, back in the 80s, you had to convince people what technical analysis was. You probably remember those days, man. And
Funny.
you know, now everybody can basically draw you up. Everyone can draw up the same wedge, and that's great. But then there's this whole other side to the marketplace that I think needs to evolve, and that's into the cyclical side and understanding time. And so that's what we spend a lot on, and that's kind of our bread and butter, and it really helps with the consistency.
Okay, so this is funny. You and I were talking the other day, and guys, you got to get it in your head here on the mental side that Jason's talking about, that it doesn't matter what comes out in the news. You can't be trying to find a reason from the news.
Mm-hmm.
So this is the trap. What happens a lot of times, you're in this stuff, and oh, it was because the Mt. Gox trader, right? Oh, it was because the Japan hack, because it was because this. Oh, CoinDesk had this article on there, and this is why Bitcoin went down. This is why this happened. Oh, it happened because of this, and that's never the case in markets. When you're talking, you know, billions and billions of dollars, quit trying to look for a reason why stuff moved up and down.
Yeah,
fundamentally, it just did. Now, what are you going to do with it?
Right. Most of the time, by the time that you get the narrative from whatever everybody's anchoring on, the move's already happened. Exactly right, man. And also in markets, it's never one thing. So I always teach guys, like, especially when you're looking at the numbers. So when you're trading around the economic data, hey, is the number good or bad? Was the jobs data good or bad? It's actually, it's not linear. It's not absolute. We want to think in terms of dynamics, in terms of everything's relative. And so what do I mean by that? You know, is the payrolls number, you know, they were estimating 200,000 and the number came in at 250,000. Okay. Was the number good or bad? Yeah, it's good. It's better than what they expected. But at the same time, I care about the overall cycle. Is it getting better or is it getting worse? So that's what really matters. And it's same thing. And it's never one thing in markets that causes XYZ to happen. It's always several things. You're never going to know everybody's position. You're never going to know all the fundamentals. The markets are just way too complex. So we try to trade around not scenario building and not trying to guess what's going to happen, and just trade what is. And so we want to trade what is happening. Where is the trend now? The cycle is the cycle. You know, you can come up with all kinds of different reasons why the market should go this way or that way, but the cycle is the cycle. Is the cycle low here? Is the cycle high here? Is the cycle low here? Is the cycle high here? We're buying here. This green line is what we call our pie line. That's a cyclical phenomenon that we trade around. So we were buying here and we were taking profits into this move because the cycle is high.
So the trap is, Jason, a lot of times, like you're talking about the farm payrolls and that 200 to 250, you know, fictitious number there, but this happens with crypto as well. Okay, so wait a minute. Coinbase announced that they're gonna do such and such, and that should help crypto. Why did the crypto markets go down?
Yeah.
And everybody's looking for a reason why it's going up or going down, and you can't trade according to that.
No.
You just can't be you can't be hooked to that. It's like crack.
Yeah,
if you're gonna live according to the news and try and trade according, it's gonna drag you down. It's gonna drag your portfolio down.
Yep. And you got to remember that markets trade on anticipation too. So the market is great at discounting what the marketplace thinks going to be like in the future. So that's why traders, professional traders realize that you want to buy the rumor, and by the time you get the headline that's so bullish about whatever it is that's running across CoinDesk, even if that's the world's greatest, headline, guess what? The good trader is selling into that news, because the markets will tend to move in advance of people are anticipating. So that's another thing, that if you're just chasing the headlines, you're always going to be late, because markets will move in anticipation. You want to be buying the rumor, not buying the news. You want buying the rumor, then selling. Then you want to be selling or taking profit into those types of headlines.
Hey, are you guys doing okay out there? Everybody on the live stream? Jeff tells me he's in here with us. Jeff Altcoin Buzz. He says smash up the likes. Everybody. That way you can get more on here. Alec, Jason, you guys doing okay? Can you go a little longer?
Oh, yeah. Yeah, absolutely.
Okay. Awesome. Because people are loving this, and they want to know a couple things. How are you, when you sell off some of your position, what are you putting it into? So are you going into Tether? You going back to US dollar? What are you doing when you take a little off the table, and how hard of a thing is that right now?
Yeah, that's a great question. Alec, did you want to answer that one, or you?
Yeah,
we're all struggling.
Yeah, I mean, I think it depends on your position size and how big of a position change you're gonna make, how much you're gonna take out of the market. Because if you're taking a little bit, Tether's fine. And I know, Jason, a lot of your positions, you have a small amount of Tether, right? You hold.
Mm-hmm.
But for anything larger than you're willing to risk in any other altcoin. So I treat Tether as any other altcoin. Any small market cap altcoin you don't trust, but you're willing to put a little bit in, you're willing to risk a little bit. Yeah. Any amount you feel comfortable putting into a small altcoin, I think you should feel comfortable putting into Tether. But if you're taking a lot of intraday trades, like Jason, sometimes you do when the market's moving, Tether is really the only option besides paying those fees. But anything larger that you don't want to lose, you go to USD. Or
yeah, I think a couple good rules of thumb for how you want to structure your crypto portfolio and trading is the majority of any of the coins that you want to hold longer term. Maybe we'll just use Bitcoin as an example. If I want to be long, $10,000 worth of Bitcoin, if I'm trading around my core position like we had talked about earlier, most of my coin for most of the time I need to have in my wallet, right? Because any coin you're leaving on the exchange, you have to realize there's a risk there that it can disappear overnight. And that holds true for Tether, right? So if just to make it an example here, a lot of times maybe if I want to be long 10,000 worth of Bitcoin and I'm trading around some of my position, right? I'm buying, I'm taking some off, right? I'm buying some back, I'm taking some off. I'm buying some back, I'm taking some off. Well, that might mean for me, I'll send, if I have 10,000 in my wallet, I'll send 2,000, right, to say Bittrex. And maybe I'll put in offers above the market. If I'm like going to sleep or I'm walking away from the screens, I have to put those offers in on the exchange, right? So that coin has to sit there on the exchange. Well, I think at any point in time, you don't want to be moving big chunks of your position onto the exchange and then putting offers in, way above the market, that it's going to take a while for the market to trade up there. And meanwhile, you're exposed on the exchanges. So I'd like to think in terms of like 1/10, maybe I guess 1/5 would be kind of aggressive to leave on the exchanges or to leave in Tether. I think that's kind of a good rule of thumb that helps traders. If my position in Cardano, okay, man, do I have half of my position sitting on the exchange, or do I have half my cash sitting in Tether? That's way too much. You think in terms of 1/10 or 1/8. Does that answer some of that?
Yeah, this is excellent. This is what people are asking, Jason. What you just said here, as far as doing that and moving it back and forth and putting it on there, not in. And again, you guys need to understand. You're out there watching all these YouTubers. You're watching other traders or you're getting all these charts off there, be really careful who you're getting trading advice from, money management advice from, because a lot of these people out there who are talking about this stuff have never done this in real life with big money.
Yeah.
And Jason, do you know any traders who real professional traders who haven't had a blow up? And when we say blow up, that means you've lost your whole account.
Oh
at
yeah.
one point in your life. I don't know any pro traders out there who haven't.
Right. I mean, the worst thing you can have happen as a new trader is you come in and you have a bunch of success, because then you think, oh, this trading thing's easy. You know, I got this thing down. Then you get aggressive, and that's usually when bad things happen. But no, I mean, that's just how you learn in this business. Unfortunately, is like, there's a lot of other professions that when you make a mistake, it doesn't cost you money. Well, in trading, when the process of learning is you got to go down a lot of dead ends. You got to make, believe me, I've made all the mistakes you can make in this game.
Yep.
And
if you stay in it long enough, you will, guys, if you're out there. And what we're trying to do is help you with money management principles and looking at your risk to reward and looking at these position sizes. We're trying to keep you in the game this is a marathon. So this, just because it's crypto and it's the wild, wild west and you get good returns on your money, doesn't mean that you just throw out good common sense when it comes to wealth management. And it doesn't matter if you guys are dealing with $1,000 portfolio. Some of you are dealing with $10,000. Some of you are dealing with $100,000 portfolio. It doesn't matter. 10% on your money is 10% on your money. So you can't look at it like, well, I only have 1,000 in crypto, so screw it. If I lose 1,000, no big deal. No,
yeah,
because
it's all relative.
It's all relative. Someday, that 1,000 could be $100,000, and that might be you paying off all your student loans with a 10% move. You might only have 10,000 left on your student loans, and you get a 10%. I talk about this on my videos, Jason, too. Okay. When you get a 10% move on your money overnight, like we frequently do in altcoins and Bitcoin, that's a huge move.
Yeah, absolutely.
It's huge. That might be the difference between you having a down payment on a house or not.
Yep.
And I mean, you get that move. Go ahead.
Yeah, I mean, I was just saying to your point, here on Cardano, we were taking profit here for that exact reason. When you buy something well, we were buying around 14 cents. Well, there's 10% move in less than, very short period of time. We're going to be taking profit on that. And obviously we've got a lot more of the move there, but that's why we don't get all in at one price. We don't get all out at one price. This is how you trail out of a position, and different, strategies like that. But
well, in normal markets, you might wait all year to get 10% on your money.
Oh yeah. I mean,
so the reason why all these guys are hungry for crypto for returns is that this could happen in a week.
Yep.
So you get that kind of move, don't be putting it down or get all upset and bent out of shape. Everybody out there in there. Okay, now, Jason, do you have time to go into a breakout scenario? Because what you were doing, you were going macro.
Yeah, let me.
The weekly and the daily. Do you have a breakout example like EOS or Ethereum?
Yeah, well, we can do. Yeah, let's do EOS. We talked a lot about Cardano. I was just gonna say one thing that I really like that it's exciting about this week. This last week was something that we haven't seen this price action this week in a long, long time. And I mean,
that's right. Yep.
The intermediate term has been so bearish. You can kind of see it here on Cardano, right? Look how everything. I'm gonna try to cycles down. I'm gonna show you something. What happened this week is new and it hasn't happened in a long time. This has been the structure of this market. Cardano and Salt, they've been a couple that have gotten beat up the most. But do you guys see how this pattern of lower highs?
Yep.
Right here, this week, the altcoins, a lot of them finally changed that pattern. And actually, the altcoins moved first this week before Bitcoin moved on Thursday. And I thought that was interesting. And I actually had said in our podcast on Wednesday that a lot of times in the stock market, you'll have the smaller cap names or the high growth companies. They actually will bottom first because they're the higher growth companies and they lead the market on the next rally. And I said, well, maybe the altcoins are taking on some of those similar properties. And sure enough, Salt did this same pattern. And so do you guys see how See how the bands are all negative here? This is why I like to use these bands. It's good visual. And then right here, now they're all starting to turn up. And we haven't had that since really back here in January. So I was actually really, this is a new tone shift this week that I'm actually really excited about. And this is the intermediate terms. This is the 4-hour. So the intermediate term is now in a new uptrend. What we're waiting for next is the longer term to start making these higher highs. And so what that would look like on the daily, that's when you're going to see your momentum really turn back. So what we need to see Cardano get above is this like 30-cent area. And then then we'll have a new bull market on the daily and the longer term levels. And so another example of that on EOS, but this is really constructive. So we've been very patient for most of this downturn. And this was the first week that I finally started getting aggressive on a lot of alts. And we'll see. I think we'll probably see some more follow through next week. But what do we say? EOS. So EOS is one of the names that actually turned up first. And this is versus BTC. I guess I'm not sure if I have. I like to chart these coins versus dollar or tether if you can, because that's going to give you a better representation of what that asset's doing. Because at the end of the day, I want to make more dollars, right? Because we're pricing, even though crypto is being called a cryptocurrency, it's still on the money side. It's still on the asset side of the equation. We're still pricing Bitcoin in dollars. So I can
which is like chart. Property, like you own jewelry, or you own property, or you own some commodity, right? That's what we're talking about.
Yeah. So in other words, like if we're just looking at a chart that's in BTC, and sometimes you can't find a coin that's versus the dollar versus tether, but I can see a truer picture of what that actual asset is doing if I'm measuring it in dollars or versus dollars. If I start to look at the chart versus BTC, that's going to distort my altcoin a little bit because Bitcoin is in the denominator, right? So if Bitcoin has a really big move and maybe my salt or my Cardano has moved up a little bit, but because the BTC has such a big move, it makes it look like my EOS or my Cardano is even sideways to down potentially. Well, that's not really a true reflection of what that coin is doing. So I always tell our group, if you can try to price these to really see the picture of what the coin's doing, try to measure these guys on the dollar tether. And you can see look at the difference in the chart, right? One, because BTC was in such a downtrend that this versus BTC, this chart was much more bullish. When I look at it versus the tether, that's actually what the underlying asset is doing relative to dollar. So this is a breakout scenario. So like,
yeah, do you guys understand that? That's huge. Jason, show them those two again and say that again, because I don't want anybody to miss this, because you're showing this shows relative strength against Bitcoin and the US dollar, which a lot of our audience, they don't trade Forex, they don't do anything. So is that in itself a signal for them? Yep. I think it is.
Yeah, and it's, again, everything's relative, right? So I can look at the price of Ethereum versus Litecoin. I can look at the price of Ethereum versus Bitcoin. I can look at the price of, Litecoin versus Ethereum. But just from the pure math standpoint, if I'm pricing EOS versus the dollar, well, in finance, assets are on one side of the equation and money is on the other side of the equation. And so typically in markets, when an asset is rising, the other side of this equation, the purchasing power of your dollars is going down. The opposite is true in bear markets, or for example, 2008, when you're having a recession and stocks are getting crushed, all the what they call so-called riskier assets are going down. The purchasing power of the dollar, or what is money, the dollar is what we price the majority of markets. It's a world's reserve currency. So as assets collapse, if everybody is selling Google and all the banks are collapsing and real estate prices are getting crushed, and even the gold market was going down in 2008 because everybody had to sell, and you're getting margin calls. You're selling anything you can.
That's
You're
right.
selling anything you can. Well, guess what? If my assets are going down, the purchasing power of my dollars is rising. And so right now, even though Bitcoin has properties of currencies, Bitcoin is actually on the asset side of the equation. So we're still pricing Bitcoin in dollars. And so that this kind of gets into Forex and what they call FX risk.
Hey, and this isn't downing crypto or fear,
No.
uncertainty, and doubt. This is reality right now, guys.
Mhm.
Now you could use this reality to your advantage. What he's saying. Go ahead.
I mean, it definitely serves. It has properties of currencies. Obviously, I mean, I can't send a wire to Canada. Last two times I sent wires to Toronto, they didn't go through. It cost me money. It gets lost. You know, we all know we can send crypto lightning fast for nothing,
Yeah.
and there's properties like that. But I'm saying, when you go into Starbucks, we're not pricing Starbucks in Bitcoins yet. So if and when we do that, I'm saying there's definitely potential down the road that develops, and you would start to see in that situation, if we're pricing things in Bitcoin, well, then guess what? Bitcoin has now moved to the money side of the equation. And so that this matters because when I look at a coin versus the dollar, I have to understand that if I'm pricing this versus BTC, and BTC is in the denominator, what's going to happen to my chart, and what is this coin going to look like if BTC on this side of the equation is really collapsing, right? This is in the denominator, so as this number gets higher or lower, it's going to affect the number, right? Just simple math. So what happened here is why this chart looks so much more bullish was because Bitcoin was still going down during this time frame. And so the denominator number, right, was going down. So that's increasing.
Yep.
It's increasing this price.
Now you were talking about this signal right here when this happened in the chat room.
Oh yeah,
Telling
we
your
were.
traders and your people, and we were talking about it.
Yeah, so we were watching EOS versus BTC. And when you had asked Matt about breakouts, this is what was starting to transpire right in this area, right here. So the market was in an uptrend here, boom, 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 making higher lows. We couldn't hold the bands. That was actually a sign that we're going to get a deeper pullback. A lot of times when we don't hold the bands in our model, it just is the probability that you get a deeper pullback is really great. So a lot of times when you break the bands, the market will move back to the 200. I can show you examples of that in Apple, any chart on any time frame. It's just once the trend like this breaks, you get the deeper pullback. A lot of times you go back to the 200. So
The rubber band stretches to the bottom side.
Yep. And that's a little bit of mean reversion. And anyway, so you break here, and this was your intermediate term downtrend. But this started to change right here. So EOS was one of the first markets that started to make higher highs again. You can see this is a higher low relative to here. This is higher lows relative to here. So the market, oh, go ahead.
Oh, you saw that happen. Did you really care what the news was, or were you just looking at it happened?
Nope.
The price did it. It just did it.
Yeah, it's I don't care what the smoke and mirrors is. I don't care what the noise is. I want to trade what is, and this is a new high right here. This right here is a new high coming off of a higher low. So this by definition is in a new bull market. It's in a new uptrend.
But
And
didn't Charles Hoskins sneeze funny on the podium at the G20 with the Venezuela prime minister watching him on the live stream? Isn't that what made it do that?
Yep. Well, that probably happened right up here into the high. So everybody that was waiting for that headline, they were buying into where we were taking profit. But yep. But anyway, guys, so this is versus the dollar. You can see the same type of well, that's versus BTC. So when we look at Tether, You know, it's not dollars, but it's still basically 1-for-1. So this is new. This is the breakout above the bands on the daily chart. This has been one of the strongest. This has been one of the strongest coins. It's one of the leaders to finally move into a new uptrend. When you look at BTC, we don't have that yet. You can see BTC still below the bands. See how we haven't quite made the higher highs yet. That would take place if we get above 9,000. So we have a new intermediate term uptrend that was happening right here, which is this is nice. That this candle right here is what we call a real money candle. It's one of the biggest candles on the chart. I call it a real money candle because it creates the real money, or the big money, has to be into the market to create that size of a candle. So when we're talking about real money in like Treasury or Forex, that's the central banks, it's the sovereign wealth funds, it's the money center banks, or the Fed or the ECB or the Bank of Japan that's in there buying, creating these large candles. So I have always called it a real money candle, but you want to follow those footprints. So this week was a very big footprint that shows me, the buying starting to come back in.
Yes, it is.
Yeah, so that's kind of what we look at. We're always we're determining the trend, and it's not about the ego. It's not about saying, hey, I think the price should trade here, or I'm bullish for all these reasons, and you build this scenario in your mind. It's just trading. It is what it is. Is the trend in an uptrend, or is it in a downtrend? Is the cycle low, or is the cycle high?
Yeah, it's what is happening right now. And is there anything such thing as a good trader or a bad trader in your mind, Jason? Because to me, it has nothing to do with whether you're good or bad, because it can change tomorrow. It's, have you managed your money properly?
Yeah, I mean, I always work with my traders on, it's about making the right action and the wrong action. Just because you had a losing trade doesn't mean that was a bad trade. It's just part of the game. But the opposite is true too, right? You can have a winning trade and you can execute so poorly on your trading plan. You could violate 5 different trading rules that you have and still have a winning trade, but
there you go.
That's not the right action. So we try to focus on doing the right action according to your trading plan or your risk management process.
That's a huge, that's a whole nother, if you guys want this, hit the like button. If you want more of this in that kind of talk, we could do a whole couple hours, and we will probably in the next couple weeks, on that principle alone, just on that there's no good or bad. Something as you're talking there, Jason, you guys see my coin checkup screen. I encourage people all the time to go into here and to just get rid of the market cap. So they go into their settings and they just get rid of market cap, so that they're not even looking at it, and get rid of circulating supply, and I don't even care about that. Go into your 24-hour volume and toggle it, and get the top 20 in volume of what's going on, and then look at it in terms of what you're saying. And maybe you want to get into this a little bit on Ethereum, but go in there and look at what's the trend of percentage in the last 24 hours, what has happened over the last 7 days, 30 days, 90 days. Just take a glance at those according to trading volume. So these are the top ones right now, and this chart is your top 50. But look here, here you are talking about EOS, and you can see over this last 7 days, we've had a 37% move compared to the Bitcoin 15% move. When you go down here through the chart just real quickly, and remember, I have this toggled, folks, according to trading volume in the last 24 hours. So I just want to know what's noisy, what's moving, what do we got volume on, and I see the relative strength. If you look at the Binance coin, it's only up 6% in the same time frame that what Jason was just talking about is up almost 38%.
Yeah,
so
that's
you can
great.
see what he just said, guys. Look at Amise Go. Almost 49% in this same time period. Does that not show a breakout relative to Bitcoin? Relative, and look, Ethereum, 32%. Go ahead.
No, that's absolutely. And the thing, we we tend to keep an eye on the volume too, because that shows you where that real money is kind of coming in, or where the capital is flowing in the volumes. I mean, you can have distribution on the downside with big volume. Accumulation is when the price is going up and the volume is going up. You have distribution on the other side of that. But no, absolutely, that's a great way to just see what's moving
It's
or what
a
the
simple
market
way to get a glance on it to help you guys do what Jason is talking about, because he's talking about recognizing these breakouts, recognizing these things that are coming up. Hey, I'm so appreciative of both your all's time that you're giving the audience. So make sure you tell me if you're okay on this, but maybe go into your Ethereum charts or something else of your choice. I'm going to poll the audience here. And look in the comments right now. I'm going to go in there while you're talking about it and just get we're going to do the top 5 that the audience wants you to look at real quick.
Okay, perfect.
So while you're going over Ethereum, I'm going to get I'm going to look down here and pull the top 5 from them. So put it in the comments, guys. Put in here what you want to see him analyze and do a quick top down. You can't do a full one, but a quick top down. And then I'll jump back on here and tell you what those 5 are.
Okay, perfect. Yeah, that's great. Well, I'll share with you guys a little bit of a risk management process here of what that looks like. When we say risk management, the first thing in trading you really want to care about is not losing money. Then you can focus on making money. But the big thing is to keep your drawdowns small and to be able to know when to go to the sidelines to play defense and raise cash, so that you can stay in the game and live to fight another day and take advantage of the other opportunities down the road. And this Ethereum was a good example of where I got out of a lot of my position and went to the sidelines, and then I actually got right back in this week. And there's a couple good lessons here, but from a technical standpoint, we can see just on this daily chart here, we see a lot of the same price action on the intermediate term that's defined the last 2-3 months. And I'll show you how I viewed this price action. But we were obviously very bullish here on the uptrend. Everything is still in place. We're making higher lows in here. This was a higher low around 900, and we went from this higher low to a bounce to actually a lower high. This was the first sign that maybe the market was tired. So anytime an uptrend is in place and you stop making higher highs, that's always the first sign that, oh, maybe this trend is slowing. And you can actually see we stopped making higher highs here first, and this double triple top right in front of 20,000. But after this next pullback, you don't really know at the time. We actually ended up buying more into this high. It was just kind of one of those fake outs, because you don't know if this is going to continue higher. But by the time you pulled away from it and you created that pivot, you can look at it and say, you know what, this is a lower high relative to the all-time high. So I got to kind of be aware of that. And so by the time we couldn't hold this low and you break the bands right here, that set in motion this whole intermediate term downtrend. You can see it's been nothing but lower highs and lower lows. And so this was a big low right here in front of the 200. And again, guys, look how when you break the bands, like I just mentioned, you tend to get the deeper pullback towards the 200. Exactly what you got there. And a lot of times you get a pullback all the way to what we call our pie line. And that actually took place also. But the point I wanted to make is that we were buying in front of right here around 450. And you can see this is one of my buy signals. And the market bounced here back to the 8. You can notice here that 8 is descending. And so we took a little bit of profit right there, just in case it didn't continue to rally, which is exactly the right move. And then you retested these lows. And the fact that the market couldn't hold here, to me, that was a sign that we needed to go to the sideline. So my philosophy is, you can always get off the railroad tracks, right? If you see the train barreling it down at you, this is basically the train coming right at you, right? You can always just move to off the railroad tracks in markets and just wait and let it go by, or you can always get back in. But so many people, they want to fight or they're in a losing position, they never want to admit that they're wrong, and they just stay in a position that keeps going against them. I'd rather just, if I move to the sidelines, I let the train go by, then I can always get back on. And so this was a point where right here I took off 50% of my long that I had bought here. I'm scaling into these lows, took a little bit off on the bounce, bought some back, and then the fact that we couldn't hold here I thought was enough of a big picture break for me that I went to the sidelines. I mean, because at this point I thought there was just as good a chance that we could have fallen to 250 or 300, and I don't want to sit through another 50% drawdown. Well, sure enough, that happened to be the low, and it doesn't mean I can't get back in. So as soon as the intermediate term went back bullish, boom, I just get right back in. And so this was a good example on Ethereum where it's okay to play defense, because there's a lot of trades that we had where we did that. We broke the bands and we got out, and then the market collapsed by another 80%. Well, guess what? You're going to be pretty glad that you raised cash, because now you can come back in on. So say Ethereum did drop to 200. Well, the trader that doesn't go to the sidelines there or cut their risk back, they don't have any cash to buy it back in at lower levels. So this is how you learn to manage your risk, is it's okay to go to the sidelines, raise cash, take your risk off. And then had the market keep collapsing, I would have came back in and started that position again lower. But anyway, so now that we've turned the corner on the intermediate term, like I said, this is the first time in several weeks and really months that the intermediate term is back bullish. So I just got right back in on Ethereum earlier in the week. You can see that buy signal.
What's your intermediate term on time-wise? Tell everybody.
Yeah, so intermediate term, I like this rally. I like that we got back above 4.25, back above 450. And I think, just like we were just talking about, when you break the bands, you can go back to the 200 or our pie line. I think there's a good shot on the next push here where we're going to retest 600. So we'll be taking more profits into that pie cycle. Probably don't have time to get into what the pie line is, but
no, they got to go to your go to your room for that, because that's huge, and it's worth seeing, guys. Oh my gosh, it's worth seeing. I love the concept, and it would have saved you all a lot of money. Go ahead on this, but if you were in Ethereum in the 600s or 700, guys, you might be tempted right now to not take profits because you're in it at a high marker. But you might actually, Jason, this mindset is, if people get a run like this and it goes really far, really fast, hard, but you were in it higher, you might do well to take some off the table and buy it on a pullback, and then it's eventually going to go back to your 600 or 700. But if it's clouding your judgment right now that you bought in higher, you need to analyze that.
Yep. And so I don't know if you guys see, it's very subtle, but right where I was getting out and going to the sidelines, that's just me sticking to my process and sticking to my trading plan, because anytime we break the bands, and this happens to be the weekly level, just like I said, there's a chance that you get the deeper pullback. And if you put a 200-week period moving average, it'd probably show up around like 200 or 300. So the fact that we couldn't hold the bands here, boom, I stop out on some and I go to the sidelines, I raise cash. And I'll take a small loss, but I'm not going to sit through another 50, 80% drawdown. And sure enough, if the market turns around and comes back up, fine, then I just get right back in. So that's just an example of trying to stick to your trading plan. But anyway, you guys can see the longer term view. This is a weekly chart. You can see how the cycle is very low right now. When we were up around 1300, 1400, the cycle is very high, right? Now we're very low in the cycle. So that's what you want to see. You wanted to be taking profits on new highs when you have angle and distance up here and the cycle's high. Now is the time to be starting to build a bigger position longer term. So we're bullish. I like that we're back above 450. And if you started a position this week, you know that your risk is right below last week's low right there. You got nice tight risk, and then you have all this upside. I mean, even if we just retrace 50% of this move right here on Ethereum, this is the move down. There's no reason why this cycle turns back up that we couldn't at least retrace back to the 900 level. But this is also a higher low relative to these lows. So that also makes me think that you're going to get a higher high at some point. So we're bullish long term. This is exactly the right timing, and this is the right spot to make a higher low.
Oh, I love this. This is gold, guys. This is gold. Okay, Jason, are you ready for the top 5?
Yeah, please.
I'm
I'm
gonna
gonna learn
pick
some new ones probably.
I'm going to pick one here, and guys, forgive me if I didn't include yours, but I just pulled what everybody was in, and this will be cool because I don't think he is in this or issued a signals. Are you in Deep Brain Chain?
No, I'm not familiar with that one.
DBC.
Ooh, that's
See, this is great, guys. DBC. This wasn't the most popular one that they said, but I on purpose picked this out because I figured you weren't in it.
Yeah, no, that's perfect. Every time we do this, I always learn new names and.
Yeah, and I wanted you to analyze it just according to price, nothing else. Like, you don't know the news, you don't know about this, you don't know what's going on. And for somebody who's already in it, and let's say you're up or you're down or whatever, it's clouding your judgment if you're in this position. And see, you're going to get right now, Jason doesn't have a judgment on this. He doesn't care. So I'm going to let this one rip first. Go ahead.
Okay, awesome. So we'll just start. There's not a lot. This is pretty new coin, so there's not a lot of cycle data, obviously, in the monthly chart. Just from a price perspective, it's kind of subtle. I mean, when you look at a chart like this on the monthly level, it kind of seems silly, but if you really pay attention to the closes, they actually do matter. So this is a small swing line right here. And if you could take out the prior month's closing level, which it's really hard to see versus BTC, but this just shows you that you're still in a bearish posture because we haven't been able to get above the prior month's high. But again, there's not a lot to see there on the monthly. This weekly will show you a much better swing line. So if some of you were on earlier on the show, I was talking about just following the prior candle's high will create what I call a swing line. And you see how the market is coiling right here, like it's spring. It's getting nice and tight and quiet. That's a really bullish pattern when you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-week drop.
Yeah,
and then
this is what I tell these guys all the time, Jason, on volatility. Things are quiet. There's not a lot of noise. There's not a huge swing back and forth. So it's in a consolidation period. You need to be aware of this, people.
Yep. This is if you think about a cycle, it's just a classic sine curve. We want to be buying. You don't want to be buying aggressively here. You want to be buying aggressively on what looks like the turn. And so this is if you draw a cycle, you can be nibbling in here, but this to me looks really primed to take off, just on this time frame. So you almost have what we call a swing line setup there. Actually, this week you did. This week is the first week you took out the prior week's high, which is very bullish. So
you guys hear that? So Jason's not shilling for them. He's not a paid sponsor. He doesn't even know about this coin. Knows nothing about it. So we're just looking at this according to price action.
Yes. Just observing the price and then the cycles. And so anyway, one of the ways you play that is you can buy that candle, stop below the low of that candle or the prior candle's low. Then you have a nice tight risk, and I mean you have all of this upside. That's what you want. You want small risk and big reward.
What's your risk to reward on this then for what you're looking at?
I mean, if you just look at the size of this candle versus, you're risking one candle and you're trying to make 1, 2, 3, 4, 5, 6, 7, 8 candles.
Okay, so and then you would say, would it be realistic to say in the next 2 years?
Oh, sure.
Of if you're involved with this, should they hang with it for the next year or two? See how it goes.
Oh, sure. I mean, if we talk about 1, 2, 3, 4, 5, 6, 10 weeks down, this might be the first week of a new cycle. So there's absolutely no reason why this couldn't run for 8, 10. There's different things we get into on cycle counts, but 8.6 is a big frequency. You can get into Fibonacci stuff, but 13 is another big. So, and then we also look at retracement. So halfway of this move down is a good target to where this market this could trade to longer term. So that's easily up here at like the 1,400 Satoshi level. But that's the weekly chart. So that's actually very bullish. Look at the weekly chart. The daily. Now the daily is going to show you this intermediate term weakness that the overall market's been experiencing, and then you have much better cyclical data here to work off of. But so notice how the market was in a bullish uptrend, right? Higher highs, higher lows. This is a massive higher high up here. And then right about in here, you made a higher low and you couldn't hold the bands. And then we started to move intermediate term bearish, right? Lower lows, right? This is what defines trend. So what defines a trend isn't about a moving average cross. CNBC will say it all the time. Oh, Apple's in a bear market because it's down 50%. That has nothing. What price is down has nothing to do with the structure of the trend. Because I can have a market that's like this, that's in a massive bull market, and be down 50%, but it still hasn't broken the prior higher low relative to the trend. So
that's right.
So this is how you correctly define trend, is based on what we call structure. And so the structure has been intermediate term downtrend. And then what you want to look for is, where does that pattern change? The chart's kind of squished. But here we finally stopped making lower lows. That's always the first sign that maybe the market's bottoming. And then right now it's poised to go, but this is your last lower high that really matters, and it's actually kind of lining up with the same area of where the bands are. So technically this is still in an intermediate term downtrend, a big picture downtrend, but the weekly cycle is poised to turn up, and then your trigger or your pivot on this time frame is this whole area. If the market can trade above here, then by definition you have a new uptrend. You're going to have higher lows. You're going to start to see this again. So this market's close to breaking out on this guy.
Nice.
It's like I don't know, I'd call it the 700 area.
How about XVG?
There's a lot of little lessons on that.
Oh, that was a ton on there. How about XVG?
Sorry, man, XVG?
XVG. That was the next one that the audience wanted.
All right, I'll try.
And you can do daily or 12-hour or 4-hour or whatever you.
Yeah,
we haven't really gone into a tighter.
Yeah, I'll go a little faster here. All right, so this is on the daily chart. Same kind of thing. This is actually a little bit more bullish. You'll notice here that you got above the bands already, and you've already started to make higher highs and higher lows. So this is actually turned long-term bullish, and it was making prior highs and bearish. So this is one of these charts that's actually in a new uptrend. We followed this one a little bit. Some of my guys have traded it. But now notice here, this is the 4-hour chart. Notice how, look at how these moving averages are all descending. And now you're in what I call the northern hemisphere. So you're above the 200, prices above all this. So this is what I mean. These intermediate term charts have all started to turn up this week, which hasn't happened in a long time. So it's starting to make me a lot more bullish. I like this name. We'd be probably.
Did you issue a signal on Verge?
No, I haven't. I haven't yet. Or maybe I did it. I don't have a position right now, but we've signaled on it prior. I just haven't put a buy signal out here.
You, Alec?
No, I was just gonna go in there. I think you asked me about Verge a few months ago, and I would recommend anyone, not technically speaking, but fundamentally speaking,
the fundamental guys,
really research this this project. Just there's a lot of red flags, is all I'm saying.
Well, that's good to know.
So that's a reason why I told you that there are more there are better projects to get involved with at the current time.
So see, guys, you've got as many traders as we get in this room. You got people that look at fundamental and technical and combinations of, and but you got to take all this into account for yourself and do your own research and do your own thing on this. And so,
yeah,
you know, first off, let's say you do want to take a light position. Maybe you kind of like the fundamentalist, but you're not sure. Well, then, you know, so take a take a 1/10 position.
Yep, exactly what you said is light position. So that tells you right there. If you have the majors, the coins that have been around longer, you can feel more comfortable, and it's probably a little bit smarter to have the more risk or more of your positions and more of your capital in those positions. And then just because you're not sure about the long term of a project doesn't mean it can't have just an amazing rally or an oversold relieving bounce. But yeah, you should just figure into your decision making. I don't want to have a majority of my capital in a name that I'm not sure is going to be around.
Okay, here's another one from the audience, Jason. We'll try to get to all 5 of these. WAN chain, WAN. Are you in that WAN chain?
No, we're not. I'm not. I don't have a position on this. And this is another one though that we've had a decent amount of interest on. So this is one of the
Pretty new.
Yeah, brand new. You're actually making higher highs and higher lows. So there's not a lot to go off on the daily, except that again you have your swing line, right? So for most of that move up, you were trading above the prior day's high, and then just recently actually took out the prior day's low. So if we go to the 4 hour,
yeah,
still making higher highs and higher lows. You're in an uptrend here. I would say really kind of pay attention to these levels right where the market's at. But this is a pretty good spot with the cycle being low. Also, a lot of times you'll get higher lows that are near the bands. So the way you play something like this is when I have an uptrend on a new name like this, the great spot to kind of figure out where you're wrong or where your stop is or where your risk is all right. This is the high of the first day of trading, and then as soon as price takes out that high, that's one of the strategies is you can go long. We trade that around the open, like gapping up on the open is one of the ways you kind of trade that. But you could do it on IPOs, you could do it on ICOs, and it's just a simple way to say, you know what, the first day of trading, the bulls took it up. If that high gets taken out, then I expect more follow through. And in that type of scenario, that produced this uptrend. Well, if you want to buy into this next pullback with the cycle being low, a great place to put your risk is right at the high of that initial move.
So if fundamentally you really love this company, use this trading analysis to develop your core position and scale into it, folks.
And your timing, right? So that's what it's all about is, you could love Bitcoin, but when you go 10x and you're going vertical like this and you're running up to a major level like 20,000, I mean, I'm very bullish on Bitcoin and I love it for all the right reasons as everybody else. But from a timing perspective, there's a time and place for everything. You need to be taking profits up there. Yeah, now, when the cycle gets low, that's when you start to go back to work and you can increase your position. That's how I play that. That's how I play that one. I mean, that's a great way to do it. You add on this dip, the cycle is pretty low, and your risk is right below there.
And the overall cycle of altcoins is that we've been in a consolidation phase. So you have that behind you too. How about Golem?
Golem. This is an interesting chart. Trying to find one here versus tethers again. Make sure I got it. Let's see if there's one I like better.
Been around for 17 months.
Is it
GNT? The audience is asking for analysis on that.
All right. I was just seeing if I think there was a chart that goes back a little bit further. Bitrix. Whack. All right. We'll just go to the smaller time frames. The weekly. So this is versus Tether. I like the fact that we're holding the 20-cent level. That's a good spot. You can see kind of a little bit of the swing line. The cycle is really low. So this is, from a timing perspective, this is the right time to be thinking about a long position. And it's already had a pretty good move up. But you notice how this is your swing line down. All right. There you took out the prior week's high. So in our model, that's a weekly buy setup. So if you buy that candle, stop goes below the low. You see how it never really closed below that low. So that's constructive. You had another swing line, took out the prior swing line's high, the cycle's low. So this coin has kind of this rhythm to it, and you'll notice where it looks like maybe we're turning the corner again. So weekly chart's bullish. Daily, look how smooth this rhythm is. Most of these highs come on. This is why we named our trading platform Rhythm, part of it. But, you know, if you buy well, you take off into the cycle. Cycle low, cycle high, cycle low. So anybody that bought well down here, it makes sense to take some profit on this move up. But I like the fact that you've changed this whole trend here, right? And again, that's what I've been saying. A lot of these projects, a lot of these tokens, this is something that hasn't happened in months. We're finally breaking the bands. We're finally making higher highs. So this is all, to me, looks very much like the beginning of a new cycle. So
Yes,
I'm bullish there.
okay. How about now? I'm saving ones that I know you're in. They're asking about Litecoin.
Yeah, LTC was actually a little bit of a laggard off this bottom, and it still hasn't made a higher high. So this is good here. So we've really been saying that the 100 level matters, and I'll show you real quick. So when I do a top down, my monthly chart, we'll just go to the weekly. You notice how this is the same areas that these markets are holding on to longer term. We're holding the bands. This 100 level was major spot. And so the market is still in a long-term uptrend as long as we're above 100. And, you know, so far so good. Notice how when we were making this crazy move to 325, almost to 400, see how high that weekly cycle was? Now, this isn't the time to be starting a new position at 350. When you have all this angle and distance up here, and notice how, again, the market basically went phase transition. That's not the time to be starting new positions longer term. Now is the time to be looking at positions longer term. And so, you know, you buy it at 127, you say, all right, whatever I'm willing to risk. Again, I'm risking one candle to make what? Several candles. You know, if I just buy this weekly and I know that 100 is a big level, boom, I now have $27 of risk, right? Call it $30, right? Maybe let it trade $3 through 100. I've got this amount of risk, but man, this is the potential of all the reward I have, right? Longer term. So we're bullish and long Litecoin. And what I'm looking for to add, I really like that this cycle's low. I think we're gonna get another big run here. The daily chart, what I'm looking to get even more aggressive is for us to take out this high right here at 136. So you'll notice, again, I just showed you the long-term view, right? It's in an uptrend as long as you're above 100. The intermediate term, this is the pattern, and this is the intermediate term weakness. But guess what? If we get above here, that's your pivot. And then you're going to have
There you go. What level is that for the folks to watch out for?
Yeah, it's
let
me be specific. This is versus Bittrex, so let's look at versus GDAX. 136, 137, and I like to point out that treat these levels as more like areas. When you're trading around the bands or moving average, treat it like an area. Treat it like a chain link fence.
I tell everybody like big fuzzy gray lines.
Yeah, right. Yeah, it's not level specific. You want to think about areas. You know, you're absolutely right. Yeah. And so here versus the GDAX, it's going to be the same spot. You know, it's 137, 138. But you get above there, then you should see a decent pop. You don't have really any resistance to 1 3/4, 175. So still we're bullish in there. I'm waiting to add. You actually see my last buy was down in front of 110, and I took a little bit off on this pop just because it was such a good move so fast. We took some last time in a 136. Sometimes these signals don't show up because I might be trading on a different exchange, but we did take into 136, added that back, took it back off.
Of course, if you guys were on the trading room, for Blockedge private trading room. Here's the signal list. If you guys can see on my screen, here we go. Sorry about that. Okay, here's the signal list that Jason pumps out here with the guys, and Alex right here in the chat all the time. You can ask all kinds of questions with him in the private room here. Just click on topics, and he's got the signals on there, why and how, and even the free. You guys offer this on the free. There's 937 of you in there, and on the free one, there's all kinds of love in here. Just tons. Just go in and dip a toe in there and find out what these guys are doing at Blockedge, and they're super helpful. And I can just tell you, from my perspective, with all these years of trading, I am not going to send you guys somewhere that I don't trust. I mean, I don't care. This is not a money thing for me at this point. I'm just not going to send you guys to somebody that I know is going to lead you astray. And these guys will not. They're teachers and educators along these lines, and I'm sure you want to do this with people who are really trading for a living, and you just got to be super careful with people out there trading crypto that have just started to get into trading. Just because they've done really well in crypto doesn't mean they're good traders, good money managers, and all that. And these guys will help you out. Go to jenkinsrm.com/buzz. And I'm going to give Alec the bonus. So we did 5 of the top from the audience. So give Jason, you pick the bonus one that you think everybody needs to get a view on. What do you think, Alec?
Oh, I think Enigma. Take a look at Enigma. I know I had to start a position, I don't know, was it 2 months ago, 3 months ago? But
people mentioned that in the chat, so that's good. Thank you.
Nice. Oh, Alec, you should talk to him about why you like that one. Alex does a lot of, he's really studies the technology and does a lot of writing on the fundamental side for us. Did you want to expand on that?
Yeah, or we could save it for another video too. I'd love to be able to talk more fundamentals. Then I know this with a lot of technicals you were throwing at people. But Enigma, I mean, it's just something that it's blockchain agnostic that enterprise really needs for adoption, and adoption is the end goal, really.
Yeah. I mean, this chart is just kind of really makes me salivate, to be honest, because I just see that this cycle, there's just certain charts that really stand out and kind of pop with you. I mean, I keep things simple, guys. Trading is tough enough as it is. So in my model and all of my years trading, I was trying to put things in simple frameworks. So I'm not confusing myself. I'm not, getting all worked up and trying to do too much thinking and just trying to stick with the process. But this is your first cycle up, right? And then this is basically we're cycling again here. You notice the cycle's high, right? This is a topping tail. You have angle and distance. You're well above the 8 here. You're 1, 2, 3, 4, 5 weeks off of, the breakout, 5, 6 weeks off the breakout. Now you have the opposite. You have, you've had this intermediate term weakness that's been down a lot. You've retraced more than 50% of this move. Now your time is right to look for a bigger picture move up. So that's very constructive. This looks like it's really just a matter of time before it breaks out. Now you can see on the weekly, we're still below the 8. We want to see that weekly, that 8 turn back up, and that's going to show you the intermediate term starting to rise. But the weekly levels here, that's 230. Let's see if that shows up a little bit easier on the daily. But again, that weekly cycle is nice and low. So 230, yeah, you can really see it here on the daily. So again, these are the same patterns that repeat over and over and over again. Doesn't matter the asset class, doesn't matter the time frame. It's all just energy. And this is what I want to see on this daily chart. Here was the higher lows on the way up, right? And then you broke the bands here, but that set in motion this intermediate term kind of pause, right? So here's lower highs. There's your lower low, there's your lower low. So this, we're testing the top end of the bands here, which this is a candidate for maybe you make another lower high and you base a little bit more. But if you had, this is how, when, like, I'm sure Alec, he was scaling in here, I'm sure, on his position. So if he's buying something well on the lows, this is a perfect time to maybe take a little bit off because you're high within the cycle, just like you were up here, and you fail at the bands. But to make this long-term bullish again, once we get through that 230 level, then that's where you should see the momentum come back in. But you're close on that. So
I love it. Now,
yeah.
okay, so the next time, if you guys like this, put it in the comments because, you know, we've been going a couple hours here, and these guys are. I'm just so thankful to you both for doing this for the audience. I mean, this is kind of like an intro one. It was our first one we did with you guys, so we'll promise next time we make it shorter. But what I want you guys to do, if you've been hanging on this long, go back and watch this. Go back and check out some of these concepts because he just crammed in, like, I mean, I'm not kidding you. You just crammed a couple months of trading course into one video, and I love it. I can talk about it all night. You guys have gone all night, but we got to let you go because it's late for you guys, late into the evening. And I know the audience really appreciates you hanging on and doing this, and then we'll do it again, no doubt at all. And what I'd like to do with Alec too is I'd like to bring in some of this fundamental and technical at the same time. So we'll do that for you guys in the audience there. We'll bring in some of this and say, okay, Alec will say, hey, I've been looking at this and I'm in it for 2 or 3 years and I love this company. And then we look at, okay, well, what's the size we want to get in? Where do we want to scale into this thing? What are we looking for?
Yeah.
And I think the audience would love that. So Alec, you get final word here for you.
No, I'd really look forward to that. I think that's something that's missing is that whole fundamental and technical together.
Exactly.
I think we can give that to you. So
awesome. Thank you guys. We had like 200-300 of you hanging on the entire time of the couple hours. So I love it.
That's fantastic.
It is. Why don't you give final thoughts, Jason, how to contact you?
Yeah, it's, thanks for having us on, man. I mean, we know it's been amazing, the network and the following that you guys have been able to build. It's just outstanding. So keep doing your thing, and that's what we're all about. And we have the same vision as, I have up here Rhythm. This is the ICO that we're currently working on our trading platform, and we just wanted to make. We got into the space and we realized how it can be a little bit complicated and it's tough for people to grasp what's a wallet and how do I even buy this stuff. And so one of my missions was always just to help traders, be consistent. And I always had the goal to be a professional trader, and I wanted to trade full time. And there's nothing like the freedom of being able to trade. I mean, I've traded and earn a living from the markets for 10 years, and it's just an internet connection and being able to trade anywhere and whenever you want and pull money out of the market's just a very freeing, amazing thing. Absolutely. And I always just wanted to help traders get to that point if that was their goal, if that's something they were excited about. And then in this whole process, we just wanted to help, build out the space and make this brand new asset class simple and help people make it easy to get started. So yeah, well, I'm sure we'll be doing this a lot more, and however we can help. And I hope we did add some value. And come trade with us, and come in the chat room and message me. I'm happy to help, and my team, whatever we can do to help you guys out. I mean, we'd love to have you.
Awesome. So you guys heard it. We're going to get together again. Here you go. Go to jenkinsrm.com/buzz just for Altcoin Buzz audience. They have done this right here for you guys. If you go to that, you get 10% off everything they do. But more importantly, right here, link to the free public room. You can get all this. Then you can dive into the 9-hour trading course and 300 hours of trading sessions and ask questions and do all that. And we're just trying to grow crypto in general. So go back, watch this video again, and send us your questions and all that. And we'll work on one thing we do at Altcoin Buzz. Jason, we try to listen to our audience, what they want and what they're looking at, and we try to get those videos and do it according to what they're working on. So if you guys ping us, you message us, you put it in the comments here what you want. We'll go through that, and next time we get on here with Jason and Alec, we'll work on those things and do it.
Yeah,
So
absolutely.
yeah. All right. Well, thank you guys. It's late for you in the Eastern time zone.
Yeah,
So
that's great. Well, thanks for everybody for jumping on, and yeah,
who won the
enjoy the
hockey
rest of
game,
your weekend,
bro?
Well, it looks like the Bruins put a pretty good beating on them.
All right. Cool. We'll see you guys next time. Thanks a lot,
right.
everybody.
All right, thanks, Matt. We'll see you guys.